All right, we're going to get started here, everybody. I'd like to thank everyone for joining us this morning. Although it is afternoon here in Cleveland, Ohio for Sam and I. I'm Jack Schroeder with Roundstone, and I'll be moderating today's discussion. If you have any questions as we go through today, please go ahead and use the Q&A function at the bottom of your screen to submit them. I'll make sure we save some time at the end today to answer those. If we don't get to all the questions, we will save them and answer them after the webinar today. So we'll make sure that we get all your guys' questions answered. Joining us today, we have Sam Walters, a regional practice leader here at Roundstone. Hi, Sam.
How you doing, Jack? Thank you.
We also have Gentry Harris, a benefits advisor at the Mahoney Group.
Good morning, everyone.
And then Genesis Garcia, who may be a familiar face for some of you. Genesis is Asba's senior marketing manager.
Good morning, everyone. Welcome.
And then our featured guest, fellow Asba member, Dave Richens. Dave is the CEO of United Food Bank in Arizona.
Hi, everyone.
Thank you all for joining us today. Really looking forward to a lively discussion on the employer journey to self-funding, as well as how Asba, the Mahoney Group and Roundstone have partnered to bring you a better solution. All right, so let's start with Asba. Genesis, why did Asba choose Roundstone as a benefit for its members? I know that we've been working, or you've been looking for a solution for quite a while.
Yes, thank you, Jack, and thank you to everyone who is joining us today. Just want to provide some small background to those who are joining us and aren't members. The Arizona Small Business Association, ASBA, for short, has been a strong supporter for the small business community for 48 years. And being a resource for you is our sole purpose. So we understand that it's difficult to find certain benefits that are of quality and affordable. And that is what we do for our members. So we find benefits and resources and make it simple for you to receive or sign them up. So with that, health insurance is a benefit that small businesses definitely struggle to find. With this last year, it definitely became more of a priority. So sometimes you'll find issues with the cost of mainstream choices, and in the end, it doesn't benefit the business. So we were really excited to learn about Roundstone because it really does offer a unique solution for small businesses and finding quality care that I know our members will appreciate.
Thank you, Genesis. We've really enjoyed working together to bring this to your members. It's really been fun. So, Sam, I'm going to turn it over to you and ask just to give us a brief overview of Roundstone, who we are, and how we help small to mid-sized businesses all over the United States.
Great. Thank you, Jack. Hello, everyone. Really appreciate the time and thanks for joining. So Roundstone, we were founded in 2003, and basically, we were founded to help stop the bleeding of this health insurance system. I mean, the health insurance system is broken, and we do that through transparency, full data, and long-term savings. But what we're going to do is convert your spend from 100% fixed cost into a very, very, very low fixed cost, high variable cost. And we're looking for a long-term solution here, and really think we got a great solution for you and your employees to help manage your health insurance spend long-term.
Thanks, Sam. And guys, don't forget, when we say small size businesses, we really mean small. We can cover groups all the way down to 5 enrolled employees, which we'll talk about a little bit later. Gentry, I'm going to turn it over to you and ask about the Mahoney Group and the kinds of relationships you form with your clients when it comes to employee benefits.
Great. Thank you so much, Jack. It's good to be with you all today. Just a little bit about Mahoney Group. We've been in business since 1915, 100-plus-year-old employee-owned business here based in Mesa, Arizona. And we provide all insurance services, including protecting your most valuable asset, which is really the employees that come and work for you and with you. And really, it's a relationship of trust, right? Health is a very personal thing. And so our objective is always to help the employees get the health coverage that they need at an affordable price. And this may not be the right solution for everybody, but for a lot of people it is. And at the end of the day, it's setting expectations and delivering on, what's promised. So we're confident about the future and what lies ahead, and are excited to partner with Asba on helping their members and their small employer groups to find a solution to this health insurance problem that Sam was describing recently. So again, thank you for everybody participating, and I think you'll benefit from hearing from one of our clients, Dave Richens, here shortly.
Yep, and right on cue, we're going to turn it over to Mr. Dave Richens, the CEO of United Food Bank. First of all, Dave, thank you for taking the time to join us. We really appreciate your time and can't wait to hear more about your experience in switching to a self-funded plan. Why don't you start by telling us a little bit about your business? I know you've done some really impressive things to support populations in your area during this pandemic. So.
Sure. So thank you, Jack. Appreciate it. And Sam and Gentry, always good to see you guys. And they've been advisors that have worked right alongside us through this journey. And so it's been an interesting year. When we launched this, we were in the middle of a pandemic even, and United Food Bank had to serve a lot of people. I mean, we served about 27 million pounds of food to families all throughout the East Valley and Eastern Arizona. And I never would imagine the stress that would have put on our organization. But one of the points of good throughout the course of this year was our health plan that we launched. You have a slide that you can go to that. You have that slide on there, Jack. There you go. So I wanted to really, I know you guys' time is valuable, so I want to really get into what we did as a food bank. We had a conventional healthcare plan with a major, like a Humana, Blue Cross Blue Shield, United Healthcare kind of organization. And I got frequent complaints from my employees about the bizarre network of co-pays, co-insurance, deductibles that they were constantly facing. And the costs seemed like they were shifted a lot to our employees, in so much that some of them weren't even using their healthcare because of what they were seeing from a cost standpoint. And we were really frustrated by what we were dealing with when it came to that. We had this stress from serving about 30% more capacity than normal. And then we had this healthcare scare with COVID and everything else going on, kind of playing off each other. And so that's what led to a discussion with Gentry and Roundstone about, hey, what can we do differently? We got our quote back from our major healthcare plan, and it had, Gentry, do you remember what the percentage increase was in that? I think it was 8%. It wasn't that much.
Yeah, it was about 9%.
8 or 9%, yeah. And I mean, so we have 50 employees at United Food Bank. I think 37 or so are on the plan. And we were paying, I don't know, what was our monthly premium? About $42,000 a month or something like that. And so we were just like, and then plus our employees were paying a ton of money out of pocket. And so we really felt like we could do better. And Gentry says, hey, we have this thing we're working on with Roundstone. And they laid it out to us, and it gave us so much control and so much better access that we were kind of blown away. And we decided, hey, let's make the leap. Let's give this a try. There were various layers that protected us from catastrophic failure, which was great. So Gentry structured that in a way that to really protect our bottom line. But there's 3 takeaways that I want to make sure everybody is aware of when you look at self-funded insurance. It's a different animal than just calling up your provider and going and then letting the insurance company navigate. You eventually get a explanation of benefits that you may or may not understand through your conventional plan. So if you go self-funded, you have to realize that there's a few things that you need to understand going into it. We did not go into this from a cost savings necessarily at first. So we're hoping to achieve those at some point, and we have a plan to be able to get there. But what we really wanted to see was we wanted to improve that access to quality care for our team. It was very limiting. The conventional plans were very limiting about who we could access. I was able to work with Gentry to look at a variety of tools that if my employees were able to use those tools, they would have zero copay on the employee side. The plan still pays the claim, but on the employee side, there were several things that if we could steer them into certain care providers, they could have zero copay. That was a big deal. I have guys that work in our warehouse that make, a little above minimum wage. I think 14 an hour is where we start in our warehouse, and then drivers that are in the, $15 to $20 an hour range, and with families. And so having access to healthcare that they didn't have to pay out of pocket for was important, because we needed to make sure that they access that care to stay healthy. So when they're healthy and they're happy and their families are healthy and happy, they come to work. And it also made us a lot more competitive as we've been hiring in this tight hiring market, as everybody's rehiring workers after the pandemic. But I just wanted to put that first caution in there. Don't look for immediate cost savings. We saw a few months that have been lower, and then we've had other months that have been right at what we paid. So we've seen a little bit of cost savings, but we've basically been able to hold serve to what we would have been paying with the conventional health plan. But we have far better access to quality care. And I can tell you a quick story about that. We had several tiers where somebody can access a healthcare provider, like a primary care physician. They can do a telehealth, they'll get a referral, that'll get them into the next tier. And Gentry, I'll let explain more about what those tiers look like. But we go from that primary care physician to a provider that might do a minor surgery or a diagnostic test like an x-ray or CAT scan or some kind of blood work. And that was all zero copay as well. So we pay a monthly fee to that provider, and we get that zero copay plan for our employees on the employee side. That was a big deal because there's another layer to protect us if something catastrophic happens, because that's the big worry that you're going to have is, what if somebody has a brain tumor? Well, within 3 months of our plan, we had an employee who had a member of their family that was on the plan diagnosed with a brain tumor, and it scared the heck out of us. We're like, oh boy, here we go. We're glad we got that reinsurance to protect us above a certain amount, right? The employee was in tears on that Monday when they found out what was going on. We put him into we had a tier that gave us a second opinion on any diagnosis. And so he was diagnosed at a Banner emergency room with this brain tumor. Banner immediately wanted to get him into some aggressive treatments. We sent him over to this second opinion provider. And I'm not sure if you're using the same companies here that we use, but ours was called Edison Health. They were able to help us access the Mayo Clinic, and this family member was able to get into the Mayo Clinic really quickly. And by Thursday, that employee was all smiles. Not that there wasn't a brain tumor, but she had a doctor that was communicating with her on a regular basis. They were accessing really high quality care that was very communicative, and it really put her mind at ease. Now, the outcome actually ended up pretty good, that they suspected that this growth in his brain has been there since birth, and that it's not growing, and that he's going to be, they just got to monitor it. So that was kind of good news. But the important thing was that employee who was totally stressed and in tears on Monday, by 2 or 3 days later in that week, was back productively working, didn't have to worry, because she knew she was in good hands. I never would have had access to that kind of quality without a self-funded plan like what we structured here with Roundstone. So that's a big deal. Second takeaway I want you guys to realize is you need to provide tools to help your employees navigate the plan. If you're with a Humana or some kind of provider like that, it's really easy just to call your primary care and kind of navigate through the system of providers there. You have to be a little bit more proactive. Your employees are going to have to do a little bit more. They're going to have to engage the plan a little bit more to get the care that they'll need. And so providing tools and working with Roundstone and our different providers, we're working on infographics so an employee knows where to go go through each steps of their care. So keep that in mind. It's not just as easy as that conventional plan, but it's worth it in the end. The last thing I want to make sure I emphasize with folks is to set your expectations at the beginning that it's going to be a little clunky. Gentry used a term that resonates in my mind. He goes, we're going to trip and skin our knee a few times at first because we're trying to figure out how all of this works. Fortunately for you guys, we've been a bit of a guinea pig on that. And so we've learned what to do, what to not to do. And I think that knowledge will translate to my fellow Asba members here. But it'll be a little clunkier to navigate than your conventional plan. But it's smoothed out. We're starting to see that happen now. We're starting to roll out some, more tools to help people navigate it. But you're only going to see those cost savings on the employee side and on the plan side when you guys take more accountability for your own plan utilization. So we really want to see your employees engage that and engage Gentry and Roundstone in navigating that plan to make sure that you get them to the right providers that are zero copay, that have good negotiated rates on the plan side, and then you'll start to see those cost savings be achieved. And that's what we're starting to see now. So we've had a few missteps. There were some misunderstandings about what copay meant, and what was paid on the plan side, and then what got paid on the employee side. On the rate side for our employees, we were able to save a bit on the amount that we set aside per month. And so we actually had been paying a 90-10 split employer-employee withholding. So we've moved that now to 88-12. We're hoping to get to 80-20 over a few years here. That's a pretty rich benefit. Typically, nonprofits pay a little bit less, and so the theory was that we'd richen it up on the benefit side. But the employees saw no additional out-of-pocket costs, and now they're seeing even less out-of-pocket costs because they're not having to pay copays if they use the plan correctly. So from an employer standpoint, our employees saw less money out of pocket, which is a good thing. The last thing I want to mention about for us is we figured that we'd spend about $500,000 on healthcare with our employees this year. And so we were able to set aside that money to backstop the plan. Not everybody's going to be able to do that, but we continue to make deposits in what we call an employee benefit trust account. It's a regular checking account. We may at some point structure that in a different way. For us, we don't have tax ramifications with that, but there may be ways to structure that trust account to give you some tax benefit. Consult your tax advisor on that. But we were able to set aside that money in an account, and so when they pull claims from it, we don't ever have to worry about the cash flow out of that account. But we diligently still set aside our $40,000 a month or so in payments for our premiums, and so we're trying to build that account up so we have a really, really big cushion there. And at some point, maybe we can share those savings back with the business. So that's, I think, most of what I had to say. We love it. We're really happy with it. It is a little scary sometimes because it's different. Our employees, they're learning their way around it. But I could not be more happy, and our employees could not be more happy. I get constant feedback from their employees about how happy they are with their health care. There is a pharmacy benefit manager component of this. I don't think I mentioned that. And they have been really, really aggressive about saving money for both the plan side and the employee side. And we have employees that were paying what we felt were exorbitant prices through our traditional plan. So on the prescription side, we've been able to save our employees a tremendous amount of money. They are very good at scouring every copay support plan, finding options, I think out of Canada even. So it's been really cool to see them work on our behalf. So it's pretty complete. So Gentry, I guess kick it back to you or Jack.
Yeah, I mean, thank you, Dave. Those were some excellent points, and I think you're right. People, and especially your employees, like to feel like they're being taken care of, right? And when you're able to get better coverage with the provider system that's known to be high quality, like the Mayo Clinic, or something.
Yeah, Jack,
It's huge.
there are a couple of questions in the chat that I want to make sure and address. Cindy asked about it, sounded very limiting to the providers you can see to avoid copays. That is partially true, Cindy, that if you can steer your employees that may not have a primary care physician now. So I had several that work for us that didn't even have a primary care physician. We were able to navigate them into the zero copay. Now, if you wanted to keep your conventional doctor, we use the network called Arizona Foundation for Health. Is that right, Gentry? Arizona Foundation. I have
care. Yeah.
Yeah, I have not found a doctor not on the Arizona Foundation plan. So that Arizona Foundation plan, I have an allergist that I see on a regular basis. They were on the plan. So there's a small copay when you use the Arizona Foundation plan. But if your employees want to totally avoid copays, there's that option for them. But you still have access to your conventional doctors. I don't know that I've seen anybody that I haven't heard any employees yet say that their providers were not on Arizona Foundation. Does that help?
So I could just add a clarifying point on that, Dave, also. So for the association plan, groups 5 to 20 that are enrolled on the plan, it's going to be the Cigna network, which is a national network. So there won't be issues finding a provider there. And then groups that have above 20, we'll have a few more options. And so what we did with United Food Bank is we actually use Arizona Foundation for Medical Care as the network, but then we also went and used some direct contracts. So often we talk about, well, what's the cash price, right? I can get a better price if I go and pay cash versus using my insurance. And so we have the best of both worlds. We have the Arizona Foundation for Medical Care network. And then we also have direct contracts through a couple of different providers that allows us to really provide higher quality, lower cost care to the employees. And because of that, we can actually waive their copays and deductibles for any of their elective procedures, and then also their complex procedures where the real money is for a health plan. About 80% of healthcare costs on a health plan are on complex conditions, what Dave was talking about, like brain tumors, cancer, cardiac care, those types of things. So hopefully that helps. There was also a question, is it just for groups that have 5 or more enrolled? Yes, this plan is, but as an advisor, we can help assist with other needs if you're an employer with less than 5 enrolled employees. So.
Yeah, Cindy also asked, we've been on the plan for about 6 months. You asked about upfront cost, time, and effort to make the plan work. So we got our quote back from Humana and implemented this plan in 6 weeks. So it was a really crunch time frame to get it implemented instead of doing the renewal. But we did it. We pulled it off. And Gentry had hair when we started that process. And so, it kind of hit him a little hard, but he pulled it off. I was really impressed. Gentry, as our broker, really worked hard to make that upfront setup process, fairly painless, so we were able to get through it. So we had several live meetings with our employees to tell them about the plan. And then we really set up our HR department as the entry point into using the plan. And so our HR person, she does HR and a variety of other things. So it's not, we don't actually have a dedicated HR person, but she was kind of our point of contact for the plan. And so as the people who needed to utilize it early on, before we had a lot of stuff kind of figured out, went to her and she helped understand the entry points into the plan. So, going to ACOS who was the primary care physician. Everyone Health is a big component of this plan. They're the ones who provide the x-rays and the minor surgeries and the testing and diagnostic pieces. They give you a care provider and an app. And my wife actually has become quite good friends with our care provider. We've had a broken bone, and we've had ingrown toenails and car accidents and things that have happened in the last few months. And we engage our Everyone Health care provider, and she helps us navigate everywhere we need to be to help us save money. And so it not only does it save the plan because we have great rates negotiated on the plan side, but we have zero copay out of pocket when we use those providers. And so, you know, for x-rays, a lot of people don't have a relationship with an x-ray diagnostic provider. It really starts and ends with your primary care physician, and then we get referred out to specialists from there. The specialists get covered for us under the foundation, Arizona Foundation for Medical Care, and likely would get covered under Cigna, I think you said. But everybody else, when we refer out, we're just a little bit careful about who we go to. But when we are, the plan and the employee save money.
Thanks, Dave. I think those are all excellent points. And everyone on the call, if you have any more questions, please feel free to submit them and we'll get them answered for you. I have a couple more questions. I'm going to go to Sam on this one. And I'm just going to ask, what's Roundstone's part in implementing and setting expectations for employers and employees who are thinking of making a switch to a self-funded plan like this?
Thanks, Jack. And Dave, that was great. Really, really appreciate it. So Roundstone, just to step back a little bit, we're what you call the captive manager. We're the ones that are going to be doing the rating. We're also a managing general underwriter. So we're doing the underwriting of the accounts, and we work with two national stop loss carriers, which one is Nationwide Insurance and American National, which Nationwide's obviously more of a household name, but also just want to let you know when you're setting this up, and Dave's right. I mean, we're not going to change, you know, all your problems over year one, but this is a long-term process. You know, we have a 90% retention ratio. Employers seem to get into it and seem to like it. But as far as implementation, you know, we can be there with you. And I don't want to sugarcoat it. There's a little bit more paperwork, but it's a better way to manage your program. But also, we're going to rely on Gentry and his team, and his account managers are going to be there every step of the way too, to help educate you and help educate the employees. As you're saying, you know, it's going to be a little bit different, but again, you know, the health insurance industry, I mean, we exist to take dollars out of that system and get them back into the employer's pocket, and hopefully that trickles down to the employees. And then one last thing, you know, we'll match the plan designs that you want. The employees are still going to see an ID card that's going to say, you know, Cigna or the Arizona Foundation.
Gentry, we have, what's the name of is it Roundstone that gets all the the benefit claims and mails them back out? I was trying to remember the name of that. You're on mute, Gentry.
Thank you. It's the third-party administrator. So
Yeah.
For Asba, the third-party administrator for groups 5 to 20 is going to be Bywater, since that's part of the association health plan. And then any groups that are above, we have various other third-party administrators that we can look at. For United Food Bank, we're using a local third-party administrator named Summit.
Yeah, and that third-party administrator is kind of a big deal. It's because they're the ones who make sure claims are going in and out properly. And so my CFO has a good relationship with our third-party administrator. You know, she's very diligent in checking claims and double-checking math and making sure everything works out right. Summit will send out your explanation of benefits. You know, with my old providers, I'd get one for every visit to every provider. And so I'd be getting mail, you know, whenever any of my 4 children ended up at the doctor or my wife. Summit, this is a little detailed, but this was a big deal to me. They would cluster all of our explanation of benefits and mail it out to us, you know, every few months, you know, when they had a bunch. Now, that may not seem like a big deal. You know, you'd save 50 cents on a stamp, you know, or several mailings over time. You know, that's not going to be a big cost savings, right? But to me, that shows an attitude of cost savings. So I know if they're watching their own pennies about how they even mail things to me, they're going to watch my backside about how my claims are being paid to make sure everything's being processed correctly. And they have been very, very good. We're very happy with our third-party administrator.
And I just want to jump in here too, Dave. That was great. And the TPA is going to be your best friend day to day. And then also Roundstone, we're going to handle the very, very large claims over there. I won't get too much over your specific deductible, but we're going to take a look at the provider and make sure they're not charging something like, 1,000% over Medicare. So our team's going to help take care of those large claims too. Because I mean, these things do happen, it's almost like an open checkbook for some of these large claims with the providers. So we're going to put a double and triple check that.
Thanks, Sam and Dave. Yeah, I appreciate that that feedback. And Gentry, I'm going to kind of go to you to wrap this up here soon. But what's the best way for Asba members to get started with this program?
Yeah, so again, I'm a person that likes to set expectations up front. I don't like to promise the world. We've mentioned it several times now. This isn't going to be the best fit for everybody, but it is going to be a fit for those employers that want to take more charge of their health insurance. And, I have clients that aren't quite ready to take a leap into self-funding, either for the potential risk or some additional work that comes with it. And there is additional work, as Dave has indicated. However, I can tell you that the ones that truly want transparency and control over their health plan have been very, very happy they did it. Their employees are happier. They're receiving better health care at a lower out-of-pocket to them, and the health plan isn't breaking because of it. Who would have ever thought that the fix to lowering healthcare costs is to provide employees with free options that aren't transparent and cut out much of the waste and middlemen in the system. There's a huge amount of waste. And if I could just add, part of the reason for me driving this is an association that I want to give credit to called Health Rosetta. There are 200 advisors like me that realize we have a serious problem with our healthcare delivery system. And if we don't step up and do something different, it's going to be taken over by the government. And as Warren Buffett has said, we'll probably all be worse off because of it. And so we have a wonderful healthcare system in terms of the care that is received, but we just have a lot of fraud, waste, and abuse, to be blunt, in the system. And there are ways for us to mitigate and control those costs and that risk. And so the first step is just, where do you want to go? What do you want to do? And we're here to discuss that with you individually. Every business is different and has different objectives. And so we want to discuss that with you, and are happy to help any way that we can.
Yeah, Gentry, I was just going to throw in, for the first time, I feel like I'm not at the mercy of my healthcare plan. I can control my own destiny in a little bit, in some way, and it feels really good. And who would have thought that a food bank, a nonprofit food bank, would be able to take this kind of risk? And I never could have without a company like Roundstone and Gentry at our side, coaching us all the way through it. Like I said, we're 6 months into it. We'd be happy to come back and share what it looks like, after a year and future plans. But I wholeheartedly say, hey, if you are an entrepreneur and you're a risk taker already, because that's illustrated by you guys starting your own small business, this is not a risk beyond what you've done in starting your own business, but it does put you in the driver's seat and concerning your healthcare benefits. And you're able to provide to your employees something that they'll, I think, really enjoy over time.
Yeah, these are all excellent points. And Dave, Sam, and Gentry, I want to thank you guys for participating and giving your thoughts on the matter. It's been a real eye opener, I think, definitely for myself and hopefully some of the people watching here today. And finding ways to control your healthcare spend, and Dave, like you said, not being at the mercy of the health insurance carrier, right?
Genesis, I think you could put, if anybody has any questions or they want to have a deeper dive, I'm available to meet with any of your members to talk about it. I'm sure Gentry would be happy to, but we're an open book here, so we're happy to share with people what's going on.
Yeah, definitely. Thanks for sharing that. So I just want a quick reminder, we will be sending out a follow-up email with everyone's contact information so that way you can get a hold. And also if you guys have any more in-depth questions as far as the plans and how to get started, you guys will be able to find that. But just so you guys can take a look, the landing page for this for members to access is asba.com/roundstone, asba.com/roundstone, or feel free to head over to our website, asba.com, and look for it on our homepage slideshow. So it will make it easy for you to go through it. But like I said, follow-up email will be sent with everyone's contact information.
Thank you, Genesis. Well, I don't see any more questions in the chat here. So again, if you do have more questions, please feel free to reach out to us. Genesis will send our contact information to everybody. But if there's no other questions, I'll give everyone about 20 minutes of their day back. All right. Well, thank you everybody for joining. Look forward to hearing from you soon.
Sounds good. Thank you, everybody.